Hello, welcome to a practical application of JS Services Desktop, where we apply a strategy-based trading approach where we align our tactics with our market state conditions. And today we're going to look at a unique signature state called a neutral negative shift, which is a market that's been in neutral and it had a negative shift. And what's interesting about this market state is that it's a negative shift with a slightly underlying positive bias to that state, and instead of a bull trend correction type of a situation where we'd anticipate that corrective action to weigh on the market, in this state, this signals against the underlying trend, but we're anticipating that that is not going to follow through, and we are going to get kind of a bounce back. So it's kind of like a head fake shift against underlying positive sentiment, and we kind of expect a bounce back. The next thing we want to do is identify the structure of this condition, and today it's unique because we're focusing on when this condition has a R level equal to the directional, and we have the same thing going on in the ultra bond. It's also in a neutral negative shift with sentiment balanced at the directional. And so you can see here's our indicator MC value for the treasury bond, and we had an MC value change of 5, so we had we were in neutral yesterday, and now we shifted to the lower side of the neutral zone, a negative shift in the neutral zone. It's always an if-then statement. If we're in a neutral negative shift market state and sentiment's balanced at the midpoint, then this is what we do. And we know when sentiment's balanced, that's our over-under number, that the market has some energy and we could see some good action. Optimally, what will happen here is we could see the market a fade buy opportunity off support. We've had this negative shift. Is it going to stabilize off the support level and bounce? If this weakness is going to continue, the negative shift is going to stay in command, then the market's going to reject from the upside pivot. This critical range should contain it. And if we break structure of this negative shift, if the negative shift is over, the big signal is going to come with a buy R breakout strategy where we get a shift in momentum above the R level and the market starts to hold positive structure and builds, and we start to get a positive transition. The same thing can happen to the downside where and both of these are transitional hedge strategy themes, and on the sell side as well we could see the market build negative structure, and we say negative structure would be lower move lows, lower move highs. We have a transitional move. So the market had a negative shift, and that negative shift holds and it turns into more of a correction or negative transition where it starts a new trend move south. And conversely, if we get with the R level, if we get a violation of the R level and the market starts to hold positive structure, that would be a positive transition. So it goes back to how dynamic it is when the R level equals the directional. Again, the R level is that over-under number. Buy breaks above here, sell rise below here. And when it's wound up in the middle of the critical range, it's really powerful. This is our condition. It's a non-trend state, neutral negative shift. R level equal to the directional. It's a situation where sentiment's balanced, we're on the fence, and the market is preparing to make a move. So if you like pivotal market states, you want to gravitate towards R equals directionals, and you can kind of search those out, and today we're going through the example on the neutral negative shift. So let's take a look at the bigger picture. Here's a daily chart, and we can see yesterday the market's been in neutral. We tried to build some positive momentum, drop back into neutral, and then we had this kind of an interesting session where we had a shift down, and as we come into today we had a big powerful surge. So let's take a look at the intraday action, what happened there. So if we come into this market, you always want to look at what's going on in the overnight session, and we can see all the trading activity was centered around the R level within our metrics. So every price map level or market structure point has a couple metrics that are key. One is a variance and one is an alert distance. You can look at the alert distance as a kind of a complete signal acceptance area, and the variance is really the optimal area to enter a trade at. The alert distance as well can be used as a good guide to define what side of the figure you're on. So through the alert distance, you're on the positive edge of it. You fall through the downside, you're on the negative side, so you can use that as a guide for stop placement as well as the variances. If we're looking at different specific strategies and entry strategies, if we're going to fade momentum, we would anticipate the market to stabilize above the figure, because that's what a fade means. We're always looking for the truth, and again, we're just presenting the facts here. So if you're looking for a fade opportunity, it should fade in front, and you have that kind of conditional alert that it started out above that alert distance, and now we're fading momentum into it. And the same with a breakout. If we start out on one side of the alert distance, we move through and break out to the other side, we would anticipate the market to stay below this figure, and use the variance as kind of the optimal area to enter in, and then anticipate the momentum to build negative structure, or in the breakout to the upside, build positive structure. And a reversal would be, we're looking for an exhaustive reversal, and you may have different events that can occur along with price action, but price-wise, we want it to start above the metric, go through the metric, and then come back above it. And then this is kind of the tell that, okay, a reversal happened. And now this is true. The reversal is true, so now it's time to get involved, and the market should start to build positive structure from here. That's what we're always doing. We're always watching price action within market structure within these metrics. And we can see that, the market is in the middle. What strategies are in the middle? These two strategies. Did we have a breakout? No, we didn't start up over here, but we did start out down below here. So, breakout, that's really the trigger that starts here and breaks out here, starts up here and breaks out there, gives it some momentum. And here we're coming into the kind of 7:30 regular, 7:20 regular old school start up, and the market makes a move and we get a breakout buy signal. So at this moment we're in, the market is telling us that we're breaking out, and we've got a hedge strategy theme that's being engaged, this buy our breakout strategy. And we've broken through that metric. And what's our expectation when we get a breakout? Well, an expectation for a breakout is always 2 APMDs. So anytime we're in a breakout strategy, we're looking for 2 APMDs. We might not get it. We may only get a half APMD. The market may only come up to here, and that'll be it. And a lot of times if you have a false breakout, they might do that. Or you'll just get a reaction here, and that'll be the first reaction, pullback, and the market will start to build momentum. But it's always good to have trade vision, and anytime you get a breakout, your minimum expectation's here, but your expectation is for at least 2 APMDs. And the best case scenario, if this thing really scales, would be 3 APMDs, and that would be also in line with a critical range breakout. And anytime we're in a critical range, no matter what market state we're in, if we break out of the critical range, we're looking for that 2 segment move as well. 2 average price met distances, 2 APMDs. One thing about the work and the structure, it helps to define those segments the market's moving in. We can use the minor levels for position management. And as the market moves through here, you can see how these metrics will work. But the key thing is if this is going to engage, we want to see that higher move highs, higher move lows. We're just looking for the market to hold positive structure. So we're going to look at, if this is our low point, here's our breakout point. We have a low here, and here's the first structure point, second structure point, and we're going to track it. And then the market starts to move higher. I like to throw moving averages on there just to kind of get a sense. And even on a micro level, we have a structure high, low, structure high, low, structure high. They take out the first, you get this little structure break, but they hold the second lows. And then here we're attaining our first target. So this is a full APMD, so that's our first objective. One thing about these moves, you had this negative shift, and when you have the momentum's being pressed, when the R low is equal to the directional, it gives a lot of energy. It has to stay below there. Is this market going to get transition or not? And sometimes it'll just fall back into a sideways funk, and it'll just be a real terrible day. And the tells are when it starts to build momentum and starts to hold structure. So when you have a market that's doing something like this, it's telling us that we're engaged in this theme. and we want to be careful. And even as you're coming into a fade situation against the upside pivot, you're watching this momentum, and do you want to step in front and fade this? We had a buy R breakout. Recognizing the theme is what's key, and as a trader. And what you don't want to do is when you're coming into here saying, oh, I had this breakout strategy engaged, but I missed it, so I'm going to fade it here because I'm hoping to buy a break. Or it's on here as a sell R fade, sell UP fade. Recognizing what theme it is key as a trader. That's what your job is to identify clarity of what are the conditions, what's happening. And if the market's not breaking structure, it's not breaking structure. We want to clue into what that strategy theme is. And even if you are stepping in front of it and you're getting stopped out immediately, or it takes a little time and you're getting stopped out now, at this point you have to have some clarity that the market is working positive price structure, and it's climbing the price map ladder. It's climbing market structure. So price action within market structure. And now you're here, and we're clearly in a hedge theme which is transitional. So it's keeping it simple. We have our moving averages. We're not thinking, oh, it's rallied too much. No, we're in a hedge theme. And as long as it's holding positive price structure and climbing positive market structure, there's no reason to think that it's not coming up to another full segment. And as we move forward, and we can use the minor levels for reactions. So the fact that we took this out here is a sign of strength. And it could pull. Where can it pull back? Well, our longer term moving average is all the way down here, and this you have price action that's aligning with market structure. So this is identifying really a good support low. How low can it go if we break? Well, it could break down to here. Does it need to? No. It could hold this metric here and it could just go. You could take out this and it could just go. It could pull down to this price structure, which is coming in alignment with this metric here. We never know how it's going to do it, but what we do is we have good clarity of where it wants to go. And we know it wants to go here. And we knew that when it did this. And sometimes it's fast and sometimes it's slow, but now we've attained our target. And we attained our variance. As soon as you get into this area, you're kind of attaining the target area. It doesn't need to come all the way to here. But until the market breaks structure, there's no reason to think that it can't continue. We don't need to think that is this over? No, we're not thinking we're going to fade it here because it's gone to 2 APMDs. We're doing is watching price structure. And as long as price structure is holding, there's no reason to get out. Or if we did get out, looking to get back in and continue to ride the momentum. Absolutely, as you get farther along this curve, your opportunities are getting smaller. Right now, absolutely, we're looking for 172.17. But we've already had a 2 APMD move, and that would be an exceptional move to have a 3 APMD move. And here we're ending out the session, or near the ends of the session, and we're just holding this momentum. But this is why I like to use a simple moving average bands. You don't need to think. The market is just, if it's going to go, it goes. If it's going to look, you're anticipating it to be a textbook situation. Anticipating it to hold structure and go, and you're having that vision here. It's like, this is my story, I'm sticking to it. If they continue, if they can hold positive price structure, hold positive market structure, this theme may engage. And what if this engages and I get 2 full APMDs out of it? Having proper leverage here, and what's your size management? You have to trade bigger. You're in an optimal theme. You need the bullets. Even if you're going to take some money off the table on a half APMD, it pulls back. It doesn't let you get back in, but it gives you another signal here. Oh, you missed it, but you still have 2 units on. Taking another unit off here as you're coming into it. Okay, now you're coming above here. Now it's back positive. Oh, I want this train's really moving. I need to get on. Re-entering here. It comes back down to the variance. Comes back down here. You're having it gives you another opportunity with a fresh buy signal on a critical range breakout. Where can it go? Well, at least a full APMD. So here, even on that unit, a half APMD, a full APMD. But just keeping it simple, use the metrics, let the market tell you what it wants to do. Neutral, negative shift market states are interesting, and they can be very interesting when the R level equals to the directional. For more information, please contact us at info@jsservices.com. You can also go to jaservices.trade and request a demo. I look forward to working with you.